Good morning, everyone. So, in today's video, what I'm going to be doing is an analysis and a breakdown of the trade that I just completed. So, today is February 20th, 2025, and it's Thursday. And so, today I was on the Forex market and I was basically looking for a continuation bullish for euro dollar and pound dollar. Okay, and so in my previous videos, I had spoke about how price was in a discount between this range low down here, between this range low and this range, or this high right here. So we're in discount, and I measure discount by using my fib from high to low, and discount is anything below 50% of this range. Okay, so when we buy in discount, we're buying when an asset is priced in fair value. Okay, and one of the discount arrays, or the discount array that I'm using in this case, is this monthly buy side imbalance, sell side inefficiency. Okay. And so you can see that here by this large blue rectangle. It's the monthly buy side imbalance, sell side inefficiency. Okay. So we've priced down into that discount array on a monthly basis. And it's also 62% of this range from low to high. So that's optimal trade entry. And my target long term is this monthly sell side imbalance, buy side inefficiency, which I have drawn out here as this long red rectangle. Okay, now price doesn't have to get all the way up here, but this just sets the stage for my long term bias. Okay, and so intraday, I'm reading the narrative and I'm reading price action to see how price will make its way up into this level. Okay, so that's my breakdown of the monthly chart. Now I drop down to the daily. And so I use the daily for my structure. Okay, so if I'm using the monthly as, my long-term bias, or if I'm keying off of a monthly discount or premium array, in this case, it's a discount array, I like to see how price responds to that array. In this case, this discount array, which is a monthly buy side imbalance, sell side inefficiency. I use the daily and monitor how we respond or react to that level. And in this case, the response was bullish. And so that confirmed that discount array as a price level or price range where price is likely, in this case, it actually did it, to go higher. Okay. And so this low right here is where we got the initial reaction bullish. All right. And so on that initial reaction, we get a market structure shift and break. We break this short-term high here. We break this internal range short-term high, and then we break this external range short-term high, which marks this as a market structure break bullish. So before we were selling off, okay, and then we had a change in the state of delivery of price from bearish to bullish, okay, and it broke structure, okay. Now, once it broke structure, and I'll put my drawings back up here now. So we can see here, this big blue shaded area, that's that monthly buy side imbalance, sell side inefficiency. Okay. And what I was monitoring in daily structure, or what I've been monitoring, is these daily discount arrays. And so this small green rectangle we have here is a daily buy side imbalance, sell side inefficiency. And I wanted to see how price would respond to that level because it's in discount of the range from this low to this high. Now, one of the key things that I want to speak about are these daily relative equal highs. Okay, so these daily relative equal highs act as a magnet to draw price higher. Okay, so even if we don't get all the way up here into this monthly sell side imbalance, buy side inefficiency, we can expect with a high degree of probability that price will draw into these daily relative equal highs. Okay, and so that's what we're getting here. Now, the pathway that price takes before it gets there, we have to gauge a lot of different things. Like all of our time frames have to point in the direction of my bullish narrative in order for me to take along. And so that's what I watch for in daily structure. Okay, so initially here we can see where we got a positive response from these daily key levels. We have this daily BSC and this daily inverted fair value gap, which is actually kind of hard to see here, but it's the space between these two candles, and I may go into that a little further, but we can see here where the bodies respected these key levels. We got the wicks, which did the damage. Okay, the wicks priced all the way outside of these levels, and all that was doing was, basically trapping people into going short. Okay, so anybody who was reading price action and, they saw where we were getting all this sell side delivery. You see, we get a retracement. They can read it that way as a retracement. And then, if we get some huge move going down this way, it will make anybody who is short think that we're going to continue to sell off. Okay. And so where would they put their stop loss if they're trying to go short right here? Where would they reasonably put their buy stop? It will be up here or up here or up here. Well, not in this case, but up here or up here. That's where they will put their buy stops. So now anybody who had been going short on this long pronounced move lower, what price action is doing is attacking the sellers. Okay, so basically what they're doing is they're moving price higher, or initially what they do is they trap traders into thinking that price is going to go lower in order to bring price up higher. Okay, so From these discount arrays, we got a small move higher, and then we break down again. Okay, so that was the initial trap. Now what they did is they trapped buyers. Okay, so they went up higher. Now they're trapped buyers into buying on a breakout. You got this huge wick down here. All right, well, let's go ahead and buy. They bring price all the way back down. Okay, so what they do here is they're engineering more buy side liquidity. So anybody else who's thinking, okay, well, I missed this initial entry to go short. Now I can go short because we just broke down again. I can put my stop loss up here. They attack those buy stops. So they pair their orders. They're basically what they're doing is people who are willing to buy at a high price, they could sell off to them. And then when price comes back down, they could buy up more buy positions, okay, where they're buying in sync with the price delivery algorithm, which is seeking to go up higher. Okay. So once we get this sell off here into this daily bullish order block, which I have outlined here is this white horizontal line, we get another price expansion. We get another market structure break, in this case on the daily. This short term high gets ran, and this intermediate term high, well, actually, this is also a short term high. This short term high here as well also gets ran, and we get a continuation of our bullish order flow. Okay, now we price back down once more. I was watching this daily buy side imbalance, sell side inefficiency. Now it's not in discount of this range from low to high, so I just have it as a buy side imbalance, sell side inefficiency, and not a fair value gap. So it's permissible for price to run through it and leave this mohawk. But all it really needed here in this case was a level that I don't have drawn out, but it's a level that price is respecting in this case. So the level that I just drew out, what I'm measuring here with my fib is this wick of this daily candle. Okay, that wick would act as a gap. Okay, so with that wick acting as a gap, we take a measurement to get 50% of it, and the 50% measurement of it is a daily premium wick, which is now acting as a discount wick. So it's initially we would expect it to act as resistance in a sell program, but because we're in a buy program, we're expecting for price to run through it, and then if it wants to come back down into it, it should invert its current mechanism for sending price lower, and instead of acting as resistance, it can now act as support. So we come back down into that level, and now from here, since this is a daily key level, in order to measure a reaction to this daily premium array turned discount array, so it's an inverted PD array, I drop down to my hourly time frame. And so what I was watching last night was this short-term high right here. Okay, and like I was saying before, this turquoise blue rectangle, that's that daily buy side imbalance, sell side inefficiency that I was talking about, which is permissible for price to run through it. And then you see how it came back up into it, and then we had this huge sell-off. So it was displaying a measure of inversion. So instead of acting as support, it was acting as resistance for price. But because I know long term, for my monthly time frame and also my weekly time frame, which I didn't go into, since I know it's long term, we're in a bullish program. So I'm expecting for this level to get priced over. Okay, and we got that overnight. Okay, so the level or the candle that I was watching was this last down close candle right here. And I was also, excuse me, I also was watching this daily sell side imbalance, buy side inefficiency. Now, once price delivered over this sell side imbalance, buy side inefficiency, which is the space between this candle low and this candle high. So we get that closure there on that candle. That was this morning. I'm sorry, that was yesterday morning. Well, once we get that, price comes back down, testing this sell side imbalance, buy side inefficiency now as an inverted fair value gap. Test it, and then it responds with this reaction away from it, breaking up above this daily buy side imbalance, sell side inefficiency. And this is now a reclaimed buy side imbalance, sell side inefficiency, this turquoise blue rectangle. So once we get into our price action this morning, we had 8:30 high impact news. We had unemployment claims come out at 8:30 this morning. I was looking to see how price would deliver at 8:30. So would it confirm a continued move higher, or would it negate that and want to run deeper into discount from my higher time frame? Since it just confirmed a continuation at 8:30, I was confident with going long this morning and anticipating for price to attack buy side liquidity here, buy side liquidity here, and ultimately all of this is all these lower highs. That's all low resistance liquidity. Okay. Your classical um technical analysis would look at this as, like a trend line, right? But it's a bearish trend line. But what the price delivery algorithm, what it's looking to attack, is attacking all that stuff. So people are looking to go short. They put their stop losses here, here, here. That algorithm is going to attack that. Okay. They're going to pair their buy orders with people who are willing to buy at a high price in the form of their stop losses, their buy stops being up here. Okay, so this here, and I'll label it, is low resistance liquidity. So the price delivery algorithm, it's going to attack those. It's going to attack it quickly. Okay, it doesn't want to give people who are short an opportunity to get out of their short position. So it's going to be very responsive and attack those levels. And so I'm on the side of the market in this case that is doing that attacking. Okay, people are being manipulated to short, and I see that. So what I'll go ahead and do is I'll buy that up. All right, and that's basically getting on side with what the smartest investors, what smart money is doing. Okay, and so once we get that run here, so I'll drop down to the 15-minute because things clear up a lot more on that time frame. We don't have a lot of imbalances on the 15-minute after 8:30. So that's why at 8:30 I dropped down to the 15-minute time frame. And of course, as always, I like to get my New York midnight opening time price to watch for the power of 3. And I'm just drawing that out here with this purple line. And so that's New York midnight opening price. It's 0 o'clock for today. And so if I'm bullish, I want to see price do some measure of selling off before selling higher. Before pricing higher. So it did that earlier this morning when the day first started. It started to price lower in London. And then what did it do in London at 2 o'clock? 2 o'clock, started to reprice higher, came back down, retraced, priced up higher again, came back down during London lunch, started to price back up higher again. So what is it doing here? The price delivery algorithm is offering buy side. Okay, so it's basically it's doing what I was expecting it to do last night. Okay, and because of that, I was like, okay, during New York, most likely what price is going to do is it's just going to continue alongside this bullish price delivery that it started to initiate in London. Okay. And so 8:30 is right here, and you can see where we are at 8:30. We have this 15-minute fair value gap here, which was a key level that I was using. And I believe I actually was monitoring price action on the 5-minute, but my 5-minute expectations lined up well with what was actually happening on the 15-minute as well, because I was going back and forth between time frames as everything was panning out. Okay, so this here is the 15-minute fair value gap that smart money is using during New York to buy. Okay, like that's where we get our most explosive move today. That's not the result of buying and selling pressure. It's the result of the price delivery algorithm offering buy side. Why is it offering buy side? Because there's liquidity way back here. Remember that phantom trend line I drew out where people are looking to sell off and put their stop losses above those lower highs? The price delivery algorithm is now grabbing, like that's liquidity. It can go on up there and it can consume that. And anybody who's in sync with what the price delivery algorithm is doing, they're going to make money. Okay. And so what we get here at 8:30, we get this fair value gap. That's the 8:30 candle. We have a fair value gap here. Price comes down into it, and between 8:30 to 9:30, price was kind of like trying to pick a side, or at least that's what it looks like. It looks like it's trying to pick a side. But here is where we get, what they're calling nowadays in smart money, this double purge. So we break above this short-term high here first, then we come all the way back down. So we basically attack buyers and sellers in this move. Okay, between 8:30 and 9:30, both sides of the market, if you're really short term, if you have a very short term perspective, both sides of the market get targeted. Okay, so if you're trying to buy on a breakout, okay, right there at 9:30, if you're looking to buy on a breakout, you put your stop down here. So price runs up and then it comes down, attacks them. So buyers are taken out. Same case in point for sellers. Well, it's a little different, but same case in point. Comes up here, and then once it sells off like that, now it's going to attack sellers. Okay, if it's selling off like that, okay, let me go ahead and go short and put my stop up here. Okay, but once that happens, it go ahead. Buy stops can be bought down here. I'm sorry, sell stops. Sell stops can be bought down here for people who are looking to buy, and then buy stops are bought up here for people who are looking to short. Okay, so we get this double purge, and this here, this short-term low is swept. It's basically a stop hunt. That's where I drew out on my execution that this was a turtle suit. Okay, or a continuation purge, but it was basically a suit, and from there we get price. It that's where it can spool right after that, and that's at 10 o'clock, which is the silver bullet hour. But right there during that time, that's when price it spools up higher. It has nowhere else to go. Buyers have been attacked, sellers have been attacked, intraday, intra week, right here in between this short time frame between 8:30 to 9:30. When we see what happens during news, everybody's been neutralized. Buyers and sellers are neutralized. Now the price delivery algorithm can deliver in the direction that it actually is trying to get to. All right, which I have up here ultimately is these daily relative equal highs. Okay, but I only needed to get in and get a 1 to 2 on my accounts, a one risk 1% or risk some measure. Okay, so I bought, I believe I bought like right here in this area right here. So I dropped down to the 5-minute to show you all where I bought in at. Because I was watching things right here. This is like 8:25. I saw where we had this 5-minute displacement. Because to me, I was using the 1 hour. Okay, I was using the 1 hour, and then I was looking for this to be an immediate imbalance rebalance, and that's basically what we got. So this 15-minute fair value gap converges with another discount array on the hourly time frame, where you get a immediate imbalance rebalance. And so I was watching how price would respond. And let me take this off here. I was watching how price would respond to the top of this wick, because I was expecting for price to come down here, touch, some measure of the top of this wick, and then explode. But I was reading that from the 5 minute. Okay. And it started to do what I thought it was going to do right there at news. It started to spool higher. Okay. So we get this nice 5 minute displacement. And then with that 5 minute displacement, it leaves behind a fair value gap here, a fair value gap here, a bullish order block here. Okay. And so I bought soon. Like, I was ready to buy. So I bought like right around here. And I think I have it. Yeah. So I have mine's labeled as a unicorn. This up close candle right here is a unicorn in the recording. But when you draw that out, and I'll do that here, I'll hide the 15-minute fair value gap, even though this 5 minute unicorn, it lines up perfectly. It converges nicely with that 15-minute fair value gap. You can see that there. So there's that unicorn, which is a very strong price pattern. Okay. It's a bearish order block that now has basically been inverted. And so instead of acting as a premium array acting as resistance, now it should act as support. And I drew that out of my execution. And that's what we get. Initially, it acts as support, a measure of support. Then price comes all the way back down, stops out anybody who had trailed their stop loss below this low, and then the true move happens. Okay. And so that's pretty much the breakdown of what happened today. I have my actual execution and recording from Trade Locker. I just wanted to go over what I was actively monitoring and what I had already previously analyzed from previous videos to gauge long-term narrative from the monthly time frame, and then to see how that all converges together very nicely in a modular way all the way down to the 5 minute time frame. So once again, thank you guys for tuning in. Enjoy the rest of your day.